And let's get it started. I'm Michael Mullis from Mortgage Teacher. And yeah, I don't know about you, but it was a little tough to get out of the bed this morning. It's pretty chilly, but hey, to come talk to all my London friends and surrounding area, anytime. So, like usual, for those of you who haven't tuned into our show before, we're going to sit here and find interesting ways to save you interest. You can always reach out through Twitter at Mortgage Teacher, and of course, you can always find us at mortgageteacher.com. So each time we do a show, we kind of want to sit here and I talk to the other mortgage agents here in London and all the clients and kind of talk about what's the hottest topic. So the last show we had, we were talking about the CMHC changes, which those are coming to effect on March 17th. So happy St. Paddy's Day. Welcome to more premiums from CMHC. As far as what's going on now, well, let's be honest. You guys have been opening your mail lately. I know I got mine. And we're all getting a year-end mortgage statement. Okay. Now, it's funny when you're a mortgage broker, mortgage agent, whatever you may call yourself here, mortgage teachers. Um, this is the type of question we get. I got, 3 phone calls yesterday. What's your lowest rate? It's funny I haven't got the call, what's your highest rate yet, but I'm still waiting for that call. But in all honesty, people call up and say, what's your lowest rate? What's your lowest rate? We're so interest rate focused that sometimes we kind of miss the true focus. And let me get a little deeper into those. And that's what we're going to talk about this first segment. Again, you can always reach us at 226-289-2991 and reach out live now at Mortgage Teacher. Through Twitter, we'd be happy to help you out. And the best, of course, mortgageteacher.com. So again, here's what kind of people focus on. I have a funny story to tell you that happened last week. But we're getting a year-end mortgage statement. So you fought really hard back when you got that mortgage. Before you got it, you probably shopped around and looked for the lowest rate. You might have called one place. You might have called another. You might have went online to shop all the differences. And you might even just got your mortgage through somebody you don't even know, a 1-800 number, because it was the lowest rate. What kind of advice did you get with it? What are your results? That's the sheet you have in front of you. So if you're listening to this show, if you're sitting there having a coffee or, well, at this time, maybe you're getting into your lunch. I'm a little later than others. But get that mortgage statement. Please go get that mortgage statement right now, your year-end annual statement. So what it's going to say on there is, congratulations, this is what you did for the last calendar year. Okay? So if you've had that mortgage for an entire year, it's going to tell you how much you pay per month, of course, your taxes, what else is included, but there's going to be a different number on this one. And it's going to have your total principal per year. Now, to break that down, that's the money you paid down in your mortgage for 12 months. So like I said, we go at the beginning to get our mortgage. We fight hard to get this lowest rate, but then very few of us even focus on our results. And that's the part that we really want to tackle here at Mortgage Teacher. Okay? So when you get that sheet, we have now developed a software. So you can go on mortgageteacher.com and you'll see the MT University. You can click on that. That's our blog. And even a post, prior to this radio show, I know there's a post just recently that's going to help link you to this software that we made. Not software, but sort of an algorithm. And what it is, you can type in your results from your mortgage statement and see if you're, doing as best as you can, or is there a better way to save money? Now, here's a really good example. Like I said, I get a lot of people coming in looking for the lowest rate. Maybe you're up for renewal and your bank quoted you a rate like a 2.94 and you're like, whoa, I can find way lower rates online. So then you start calling around. Well, okay, that's good. Maybe you are looking to purchase a place. So you want to get pre-approved and see what your lowest rate is now. Maybe you want to do some renovations around the house. So you're thinking about refinancing the money. And let's look at the time of year, guys. We just had Christmas. There's vacation time. So maybe there's been some debt accumulation or you want to plan ahead for a vacation, but it's time to sit down and use that equity in the house. I mean, let's face it, Londoners, we're looking at our houses and a lot of us bought it for maybe a 300 and now it's worth 350. Maybe you bought it for 320 and it's now worth 380. So that's almost free money. So can you use that money to get ahead? And I do always teach people, I mean, let's face it, mortgage money is your cheapest money. As long as it's not in that all-in-one line of credit mortgage, that's a whole other show in itself. But mortgage money is only compounded twice a year, a mortgage, where a line of credit money is compounded 12 times a year. So not only you got a higher interest rate on a line of credit, but the interest being compounded more. So that's why I always tell people, take a look if you're refinancing or renting, consider throwing that into the mortgage. But back to the mortgage statement, okay? The year-end annual statement. We want to take a look at that principal amount. how much principal are you paying off per year? I see a lot of sheets come in that are anywhere from $3,500 to $5,000. Now that the interest rates for, last couple of years have been 2 and 3%, I really see a lot of people paying off a good $3,000 to $5,000 to $6,000 a year. That's not bad. Not bragging or anything about our office, but when I see mortgages leave our office, I see more like a $10,000 to $17,000 in principal per year, and that's what we're here to do. So I had an interesting gentleman come in last week. If he's listening on air, how you doing? But he came in and he was a retired gentleman, so he had some time on his hands, and he came in looking for his son into a mortgage. So he's doing the research. So he comes in the office and he lays a mortgage statement in front of me, a year-end statement, much like the one we're talking about right now. And he lays it out in front of me and he says, Michael, can you beat this interest rate? I'm looking for my son. I look, 1.85%. Are you kidding me? I didn't even believe it, to be honest with you. So he had a variable rate mortgage, okay, that was discounted for a certain term. It was a short term, so he had a really good rate on it. Don't quote that rate because you can't get it now, so don't get your hopes up, guys. But with that being said, he sits down with a 1.85% interest rate. So I think we can all agree, mortgage agents, realtors, anyone that knows that business, this is a really good interest rate. Here's the funny thing. He owes about $167,000. Not a big mortgage, not a small mortgage, but still a decent size. So he's got 1.85 and he's paying $167,000. I said, well, that's a great rate. No, I can't match it, but I got to ask you something, sir. What's this? And he says, what's what? I said, take a look at this number here. How are you using that mortgage? And he turns it around. You ready for this? $2,185. So you mean to tell me he fought so hard to get that interest rate 3 or 4 years ago when he got it, to the point that he didn't even take a look to see what he's paying off from principal? And there's a good example. It doesn't always matter, guys, what your rate is as far as how important it is to use the rate. And each client that we sit down with here in Mortgage Teacher, there's basically one of two Canadians, okay? Guys, I think we can all face the facts that some low rates are just going to be history. In fact, a couple of months ago, the 5-year fixed was at 2.4%, and it's already history. We can't get it anymore. So low rates are going to be history. Some of them are already. So here's the conversation. Are you going to be the Canadian that looks back at the low rates and goes, honey, remember when our payment was only $600 a month and now it's $1,000 a month? Oh, those were good times when our payments were really cheap. Or are you going to be the Canadians that said back when rates were really low, we really paid off our principal. We took advantage of the low interest rates and really paid it down. And that's the type of mortgage we want to help you create here at Mortgage Teacher. It's more than just, here's a payment, here's a great rate, have a great day. You can walk out of that meeting happy. But what happens if they follow up every 6 months? What happens if they follow up every 12 months and say, here's your success? Typically, you would be paying $6,000 off, but now you're paying $11,000 off. One stat I'm very proud of here at Mortgage Teacher, over 70% of our clients prepay their mortgage. Now, let's be honest. When's the last time you got a call from your bank? It says, hey, I got a great idea for you to pay less interest. Last time I checked, they're out to make some money off us, guys. So that's what we want to watch out for, okay? Take this, like I said, if you're just tuning in now, your year-end mortgage statement is the topic of this. Please go to mortgageteacher.com and take a look at the MT University. There's a blog there about the year-end statement where you can type in your results and see if you're getting the best that you can. You can also reach us through Twitter at Mortgage Teacher, and you can reach us at 226-289-2991. We're going to take off for a break, but when we come back, we're going to continue with this annual mortgage statement. So if you're going to tune in this commercial, please run out, grab your year-end mortgage statement, and we'll be right back. And welcome back. I hope you're staying warm because it is not getting any warmer today. All right, as the song says, here we go. I'm Michael Mullis, president of Mortgage Teacher. And in case you don't know exactly what Mortgage Teacher is and does, well, basically, let's break it down. There's 36 banks out there selling you mortgages. There's trust companies you can get a mortgage, and then there's credit unions. We got one downstairs here in the basement, so the radio station, that is. So we've got all these to choose from, 50 of them, and Mortgage Teacher helps break down which one is the best setup for you. So, of course, you can always find us at mortgageteacher.com. If you want to reach out to us live, you can reach out through Twitter at Mortgage Teacher. And of course, you can always phone us. And we're been busy with the phones this morning, but we can definitely take your call at 226-289-2991. Now, if you're just coming back from the break, or maybe you're just tuning into the show now, what our discussion was in the first segment before the news there was more on your year-end mortgage statement. If you don't have it now, you're getting it very soon, but we're all receiving in the mail our year-end annual mortgage statement. And as I discussed earlier, what this shows is not only what your payment is per month. Yeah, I get it. And what my interest rate. Oh, yeah, I remember fighting hard to get that. Okay. Oh, but what's this? Here's the interest you paid per year, and here's the principal you paid per year. Now, hopefully, the principal's higher. That means you're well into the mortgage. But if it's not, could it be? And that's where we're going to talk about today. We've developed a back-end program. You can go to our Facebook page, look up Mortgage Teacher in Facebook, like us. We're really friendly. We have a lot of fun here in the city. But of course, also look at our website, MTU, the MT University. There's a blog in there that has a formula that you can plug in these numbers, and it gives you a bit of a grading and tells you if you're paying the most that you could be. Okay? So that's what I want to reach out and talk about. So I told this story earlier about a gentleman sitting down that he kind of ran his numbers by me, and he wasn't paying near the principal he could. So when people call us up, they ask for the lowest rate. We get it. We fight so hard to get that lowest rate because, hey, it's a big purchase. But here's something you got to keep in mind, guys. It's just like, that's your biggest purchase in life. I would say a house. Agree? I would say the second biggest purchase, probably the car. Now, when it comes to shopping for a car, okay, we don't just drive around in the cheapest car. We're not all driving $2,000 cars around. So how do we pick the car that we want to drive? We find the best value. If I buy a 2016 Mercedes for 10 grand, I think I found some value there. If you find that deal, by the way, please reach out. But that being said, what do we use? What kind of tools do we use to shop that? And that's kind of where our idea came from Mortgage Teacher. What about something like Consumer Reports? Consumer Reports just gives you advice, unbiased advice. This car has this mileage. This car has this safety rating. They just break down the cars. You might go pick the Dodge car because you like the front of it. That's up to you. You always have your choice at the end of the day. But Consumer Reports gave you the free advice on it. That's what Mortgage Teacher is to the banking business. It's unbiased and it's free. And we're here to build a relationship. I mean, that's the number one complaint we get in the banking business is, every time I go back to the bank, it's a different person. I sat there and developed a plan. I went back there 2 years later and, he or she is not there anymore. And that might be on purpose, guys. Maybe they don't want you to have a relationship. Well, as you can see through social media, we are accountable for our actions. Please look at the reviews we have. Look what Londoners are talking about Mortgage Teacher. We are here to help give advice. We're not out to get every mortgage, and sometimes we don't. Sometimes it's worth it for someone to just stay where they are, maybe a job change. But when we go back to this annual mortgage statement, and people are shopping for it and see how the results are, when you're shopping for that lowest rate, I get it. It's important. I'm not saying take the highest, but find your value. So I always sit down and say, okay, well, can you get me 2.44% was a phone call I had yesterday, Friday morning it was. And, it's possible I could get it, but it doesn't come with the best value. So the deeper we got in the conversation, I find out he's looking for $70,000 mortgage. Well, the funny thing is from 2.4 to 2.5 was only $1.80. $1.80 difference from one rate to the other in that small mortgage. So when it comes to something small like that, does it really matter on the rate versus maybe there's a $300 discharge fee at the end in one institution and not the other? You just lost your savings in the fee that you didn't even talk about. So that's why you want to measure to make sure. Now, when it comes to, shopping around and getting to talk to different people here at Mortgage Teacher, we have the same setup. We have different mortgage agents here in the city, and one of our agents is here with us today, Rhonda Stark. How you doing?
I'm doing great, thanks, Mike.
Excellent. Rhonda surprised me all the time. If you're in any network group or here in the city with her social media, I get to see how hard she works, and yeah, she meets a lot of different people. You deal with so many different. And I got to admit, you might even know Rhonda from selling a book at Chapters. The name of the book exactly is?
It's Get Mortgage Ready, the first step in getting mortgage free faster.
Oh, fantastic. So a lot of people take that approach. They want to sit down and really educate. I mean, some people might do it online nowadays, but hey, if you want the paperback and the book, Rhonda, you can reach out to her. Now, just quick about the book. look up rhondastark.ca. But when it comes to helping out, and I know I've seen you at the seminars and networks, you deal with so many different people, Rhonda. I've seen them in and out of the office.
Right.
If you were to, I don't want to say the others aren't good, but if you were to pick one favorite niche or types of clients that you like to work with the most, what would be your favorite?
Well, because I deal a lot with first-time home buyers, what I really like to do is I really like to transition those first-time home buyers into their next home. So it would be a growing family who's been into their home for probably 5-year period, and they're looking for more now. They need more space, a little bit bigger home, and transitioning them, trying to find that dream home that they can settle into for a longer period of time and really get them to like that home as much as they dream that they will. So I really like working with that segment of the clientele for sure.
And London's a great city to be able to do that because luckily enough, our homes have been increasing.
Yes.
So your first time home buyer has probably made some income
Yes.
on the house. Some equity.
Right.
At the same point with your advice and from your book, getting them into the house,
Yes.
they probably had strategies to pay it down. So
Oh, absolutely.
now, can I ask you this? I don't mean to catch you on the spot, but do you find that next house, do they often have 20% down or not? Or is it pretty close? What do you find?
Well, it does depend on a number of things, one of which is how much they put down initially. What I try to do when I work with my clients is have that sort of long-term goal established right up front so that I know how to work with them over that 5-year period of time after they purchase their first home so that I know what their goal will be, how much they want to have in equity at the end of it. And then we work towards building their equity quicker. So that at the time they make their next purchase, then they can have that 20% or as close to that 20% equity as possible so they don't have to worry about that.
Okay, Rhonda, that's exactly why you are a mortgage teacher. That's exactly the things we want to say, and that's exactly the type of people that we get here on the team. So we want to sit down and plan and make sure you're getting where you want to be. I said this in the first segment, but when's the last time a bank called you and said, are you getting to where you want to be? I have an idea that you can save an extra $10. I have an idea that you can save an extra $20. No, they don't come up with these strategies, okay? So that's what we're here to do. And like Rhonda said, help everybody out, whether it's a book. Again, you can please reach out to Rhonda at rhondastark.ca. Rhonda, thank you so much for coming in.
Thanks for having me.
And again, what we're talking about is all mortgages, interesting ways to save you interest. Today's topic was your year-end mortgage statement. Please, please reach out to mortgageteacher.com. You can ask us questions through Twitter at mortgageteacher, and you can always call us. Phones are a little busy today, it looks like, but you can reach us at 226-289-2991. And if we don't pick up, because we've only got 2 people in the office, please leave a message because we do get back to you right away. Okay, so all the best, London. And again, interesting ways to save you interest with Michael Mullis from Mortgage Teacher. Have a great weekend.